Intuit Inc. has reaffirmed its optimistic financial outlook for fiscal year 2026, emphasizing the role of artificial intelligence in driving its growth trajectory. During its Investor Day event, the company reiterated its revenue projection of $20.997 billion to $21.186 billion, marking a 12% to 13% increase, alongside a GAAP operating income forecast of $5.782 billion to $5.859 billion, representing a 17% to 19% rise. Adjusted operating income is expected to range between $8.611 billion and $8.688 billion, up 14% to 15%. These projections align with the guidance issued in August 2025, underscoring Intuit's confidence in its strategic investments in AI and data services, which CEO Sasan Goodarzi highlighted as key drivers of the company's ability to operate with agility and scale globally. Intuit's growth expectations are further detailed across its business segments, with the Global Business Solutions segment projected to expand by 14% to 15%, and consumer revenue anticipated to rise by 8% to 9%. Notably, TurboTax is expected to grow by 8%, Credit Karma by 10% to 13%, and ProTax by 2% to 3%. The company's commitment to leveraging AI is seen as a pivotal element in maintaining its competitive edge and sustaining long-term growth. Following the announcement, Intuit's stock saw a 2.59% increase, trading at $679.84, reflecting positive market sentiment towards its strategic direction and growth potential in the AI-driven financial software space.
KuCoin Pay has announced a strategic partnership with DFX.swiss to facilitate cryptocurrency payments at over 100 Spar retail stores in Switzerland. This initiative allows consumers to use stablecoins and other cryptocurrencies for everyday purchases, highlighting a significant step in the practical adoption of digital currencies in retail environments. The integration leverages DFX.swiss's open crypto QR system, ensuring transactions are processed with zero gas fees and providing instant fiat settlements for merchants. This collaboration underscores the growing trend of integrating digital assets into conventional payment systems, aiming to enhance the real-world utility of cryptocurrencies. The partnership between KuCoin Pay, a prominent global cryptocurrency platform, and DFX.swiss, a Swiss digital asset service provider, is strategically important for both companies. It aligns with KuCoin Pay's broader strategy to expand crypto adoption across various sectors, including retail and e-commerce, by offering lower commission fees and secure non-custodial payment mechanisms. This move is expected to not only benefit consumers through seamless and cost-effective transactions, but also provide merchants with an efficient alternative to traditional payment methods. As cryptocurrencies continue to gain traction, initiatives like this could play a pivotal role in making digital assets a routine part of consumer spending in regulated markets, thus reinforcing the ongoing evolution of the financial sector.
Intel Corporation's stock surged by 30% in pre-market trading following the announcement of a $5 billion stake acquisition by NVIDIA Corporation. This strategic partnership aims to integrate NVIDIA's AI and accelerated computing technologies with Intel's CPUs, potentially giving Intel a competitive edge against rivals like AMD in the x86 market. Although this collaboration could transform Intel's product offerings, it does not address Intel's ongoing challenges in its foundry business. As NVIDIA has not committed to becoming a customer, the market's reaction indicates optimism about Intel's future prospects, with the stock crossing the $30 mark from previous trades under $20. However, some analysts suggest that the benefits of the deal may already be reflected in the current stock price, recommending investors consider taking profits. This development underscores the shifting dynamics in the semiconductor industry, where strategic alliances are becoming crucial for maintaining competitive advantages in the rapidly evolving technology landscape.
Next, the Leicester-based fashion and homewares retailer has reported a significant 13.8% rise in underlying pre-tax profits to £515 million for the first half of the year, driven by a 10.9% increase in total full-price sales. However, the company's CEO, Lord Simon Wolfson, has issued a cautionary note regarding the UK's economic outlook, describing it as anemic due to rising unemployment and the impact of recent government tax hikes. Despite the strong performance in the first half, Next anticipates a sharp slowdown in UK sales growth to 1.9% in the second half, down from 7.6% in the first half, attributing this to the absence of favorable summer weather and disruptions faced by competitors like Marks & Spencer. The company also highlighted concerns over the UK labour market, noting a 35% drop in job vacancies within its business, compounded by increased wage costs due to higher national insurance contributions and the minimum wage. This trend is expected to reduce consumer spending power, further impacting sales. Despite these challenges, Next has maintained its full-year profit guidance, forecasting a 7.5% rise in group sales and a 9.3% increase in profits to £1.11 billion. However, the market reacted negatively, with shares falling 6% following the announcement. The company's strategy to counteract these headwinds includes expanding online sales, although growth in this segment is expected to slow significantly in the coming months.
Uber Technologies has announced a strategic partnership with Flytrex Inc., a drone company based in Tel Aviv, to initiate drone-based meal deliveries in the U.S. through its Uber Eats platform. This collaboration marks Uber's entry into the burgeoning drone delivery market, joining the ranks of companies like Alphabet's Wing and Amazon's Prime Air, which are already exploring similar technologies. Although the specific test markets for this initiative have not been disclosed, Flytrex is currently operational in Texas and North Carolina, suggesting these could be potential locations for the rollout. The integration of drone technology into Uber Eats' delivery system is poised to enhance delivery speed and sustainability, aligning with the industry's broader trend towards autonomous technology. Flytrex, which has completed over 200,000 deliveries in the U.S., brings aerial innovation to the table, complementing Uber's established logistics network. This partnership underscores a significant shift in the logistics landscape, where autonomous drones are increasingly seen as a viable solution for fast, cost-effective, and hands-free food delivery. The move could potentially redefine consumer expectations and set new standards for delivery services, impacting market competition and operational strategies across the sector.
India's ongoing trade negotiations with the United States are reportedly progressing well, as indicated by Union Minister for Commerce and Industry Piyush Goyal. The discussions aim to establish a bilateral trade agreement, BTA, which commenced in March 2025, with the first phase targeted for completion by late 2025. Recent meetings between India's Ministry of Commerce and Industry and the U.S. Trade Representative's Office have been described as productive, with both parties committed to intensifying efforts for a swift and mutually beneficial resolution. This development underscores the robust strategic partnership between the two nations, despite recent tensions over tariffs imposed by the U.S. on Indian goods. The negotiations occur against a backdrop of U.S.-imposed tariffs, which have reached 50% on Indian goods following India's continued import of Russian oil, complicating the trade dynamics. Furthermore, India remains cautious about U.S. demands to open its agricultural and dairy sectors, vital for the livelihoods of many Indians. The outcome of these negotiations could significantly impact market sentiment and trade flows between the two countries, potentially easing tariff burdens and fostering a more favorable environment for bilateral trade. As these talks progress, the strategic economic relationship between the U.S. and India continues to evolve, with potential implications for global trade patterns.
The Securities and Exchange Board of India, SEBI, has dismissed allegations of stock manipulation against the Adani Group, a conglomerate led by billionaire Gautam Adani, following accusations made by U.S. short seller Hindenburg Research. The allegations, which surfaced in 2023, suggested that Adani Group companies, including Adani Ports, Adani Power, and Adani Enterprises, engaged in transactions using tax havens and failed to disclose related party dealings. These claims triggered a massive $150 billion sell-off in Adani's stock. However, SEBI's investigation concluded that the transactions in question did not breach regulatory norms, as they were not classified as related party transactions under the applicable rules. The dismissal of these allegations marks a significant vindication for the Adani Group, which has consistently denied any wrongdoing. This development may bolster investor confidence in the conglomerate, whose shares have already rebounded since the initial sell-off. The case highlights the broader challenges faced by short sellers like Hindenburg Research, who aim to expose corporate malpractice but can face significant backlash if their claims do not hold up under regulatory scrutiny. The SEBI ruling underscores the importance of adhering to disclosure norms and the complexities involved in defining related party transactions within the regulatory framework.
Quantum stocks have experienced a significant surge, driven by strategic acquisitions and government partnerships. IonQ Inc. has been at the forefront, completing the acquisition of Oxford Ionics and entering into an agreement to acquire Vector Atomic, backed by over $200 million in government contracts. The company's stock soared to an all-time high following the announcement of its participation in the Department of Energy's Quantum in Space collaboration. This initiative aims to advance space-based quantum technologies, enhancing applications like secure communications and quantum sensing. The positive outlook was further bolstered by a buy rating and $80 price target from Needham analyst N. Quinn Bolton. In parallel, D-Wave Quantum Inc. reached a new 52-week high, driven by strong sector sentiment and impressive performance in the Asia-Pacific region. The company reported an 83% increase in bookings and highlighted successful projects, such as a quantum AI drug discovery pilot with Japan Tobacco and a network optimization initiative with NTT Docomo. Rigetti Computing also made headlines with a $5.8 million contract from the Air Force Research Laboratory to advance superconducting quantum networking, pushing its stock to an all-time high. These developments underscore the growing importance and investor enthusiasm surrounding quantum technologies, with significant implications for sectors like cybersecurity, telecommunications, and drug discovery.
Extend, a prominent spend and expense management platform, has successfully raised $20 million in new capital, combining venture debt and equity investment. The funding round was led by B Capital, with significant contributions from March Capital, Point72 Ventures, FinTech Collective, and New Investor Commerce Ventures. This infusion of capital is set to accelerate Extend's profitability trajectory and support the launch of its new paid SaaS offering. Extend's platform allows businesses to streamline expense workflows and manage spend controls without altering their existing bank card programs. By leveraging partnerships with leading banks, Extend facilitates the creation of virtual cards for vendor payments and employee purchases, enhancing transparency and automation in expense management. The funding round coincides with strategic leadership changes, as Francois Horikawa, formerly of PayPal, joins as Chief Financial Officer. His fintech expertise is expected to guide Extend towards operational excellence and sustainable profitability. The investment enthusiasm is driven by Extend's expansion into expense management and its robust pipeline of issuer partnerships, positioning it as a potential category leader in the B2B payments ecosystem. With its API-driven architecture and virtual card capabilities, Extend is well placed to transform the $1.6 trillion U.S. corporate card market, catering to a diverse range of business needs from SMBs to digital commerce.
The recent meeting of the High-Level Joint Task Force on Investments, co-chaired by India's Commerce Minister Piyush Goyal and Sheikh Hamd bin Zayed Al Nahyan of the Abu Dhabi Investment Authority, underscored the strengthening economic ties between India and the UAE. The discussions focused on expanding collaboration in sectors such as maritime, space, and financial integration, reflecting a shared commitment to innovation and sustainable development. A significant highlight was the 34% increase in bilateral non-oil trade, reaching $38 billion in the first half of 2025 compared to the same period in 2024. This growth is largely attributed to the India-UAE Comprehensive Economic Partnership Agreement, (CEPA), signed in 2022, which has been instrumental in boosting trade flows and private sector cooperation. Key initiatives discussed included the development of Bharat Mart in the Jebel Ali Free Zone, designed to provide Indian exporters with a permanent presence in the UAE market. Additionally, progress on currency integration and digital payment systems was noted, with efforts underway to facilitate local currency trade and integrate cross-border payment systems, including central bank digital currencies, CBDCs. The task force also addressed regulatory hurdles and investment-related issues, emphasizing the importance of resolving these challenges to further enhance bilateral trade and investment. This strategic partnership serves as a model of economic cooperation, positioning both nations to leverage their shared goals for mutual success in a rapidly evolving global economy.